Alternative investments should be for everybody. And so part of our goal is to be able to create additional transparency. Transparency comes around disclosures of information as well as price discovery. Being able to say, hey, there's a bid out there at 50% discount, but there's also this other institution that's willing to pay, 10% discount. But then maybe there's an individual that was willing to buy something at a 5% discount.
Right.
Totally, we love the idea of being able to open it up.
Starting your route to retirement.
Welcome to the Guided Retirement Show. I'm your host, Dean Barber. Got a great guest for you today, Brian King. He's the CEO of Realto. Now, the story behind Realto is pretty great. It's a startup company. It's offering liquidity for illiquid assets. Please enjoy my conversation with Brian King. All right, Brian King, CEO of Realto. Welcome to the Guided Retirement Show.
Thank you very much for having me.
So let's clear out this. What does Realto mean? And that'll kind of drive us into the subject that we're here to talk about today. So, what is Realto?
So, great question. We were very intentional about when we were naming the company. So, when you look at the word Realto, RE stands for real estate. ALT stands for alternatives, and the word Realto actually means exchange or marketplace.
All right. So what you've done is you've created an exchange or marketplace for non-traded securities that are otherwise illiquid.
That's right. So we've seen an incredible growth in the alternatives market in general. And so we've seen a lot of secondary markets pop up that address corporations. But what we haven't seen is secondary marketplaces to be created for real estate related investments. So we're starting on the real estate end of the spectrum because there really, like I said, hasn't been any competition in that arena.
All right. So before we get into kind of what you've done at Realto, let's talk about the alternative space, specifically the non-traded real estate investment trusts. And those things are issued by an entity that says, hey, we want to raise some capital. And what we intend to do with that capital is we want to go out and buy a bunch of apartments. We're going to manage those apartments. We're going to fill them up. We're anticipating that based on the way the market looks today, we're going to get a yield of X. If prices appreciate by Y, we're anticipating a pro forma or a total return, and then a potential exit strategy 5, 7, 10 years down the road, right?
That's right.
And so they're really, when somebody's buying into a non-traded real estate investment trust, unless they're doing it very late in the stages of the fundraise, they really have no way of knowing whether or not the person that's issuing that or raising the funds is going to be able to reach those objectives.
That's exactly right. So a lot of times that money is raised through the broker-dealer channels. So they reach out to different broker-dealers, say, hey, we would love for you to be able to help us raise this capital. And typically the end investor either likes the idea of what they're investing in or what the possibility of it is investing in. And if they do, they like that idea, then they can invest their money into that. But oftentimes, to your point, it's a blind pool. You don't know what they're actually specifically going to be investing in until they have the money to go buy those assets.
Yeah, I've looked at those, and we've actually used those from time to time with clients over the years, Brian. But the thing is that I would always wait until they've raised 90% of the capital that they want to raise, that they've already purchased buildings. We know what the prices were. We know what the yield is. We know what the occupancy is. And they're at the final stages. And I would say, okay, that's something that's attractive. But I would always shy away from those ones where it's a startup, right? We're in the early stages of the fundraise. It's like, get a bunch of money together, start buying some properties, and let's see what you get. And then we can make a decision.
That's right. I think there's, again, at the end of the day, real estate investment trust is just one type of a structure. There's a lot of other structures that are out there, but a real estate investment trust has a couple of different dynamics as far as how they can be able to put that capital to work, et cetera. And again, a lot of times it's how the money is being raised. But you're exactly right. I mean, there's a lot of question marks. A lot of times the firms have some type of a track record. And if you see that, they've raised this other fund and it's had a decent track record, oftentimes people say they'll rely on the track record of a deal that they've done before and say, okay, they'll apply it and say, well, they at least know what they're doing. But to your point, everybody's got to start somewhere. And so a lot of times you could be the first one.
Again, the concept behind the real estate investment trust is for the average investor to be able to invest in either real estate for growth, which would be a portfolio that would have a fairly high amount of debt, or a real estate for income, which they would have a fairly low amount of debt and trying to kick off a decent dividend, kind of like a bond alternative. But again, they come in all kinds of shapes and sizes. I'll say there's been real estate investment trusts from a historical perspective that have been wildly successful, where people have made a lot of money. And then on the flip side of it, there's been real estate investment trusts that have done a total flop, and people have held them for 8 years, for 10 years, and they're still not liquid, and they still can't get their money out of them. That's where you guys really come in, right? It's maybe they haven't flopped, but maybe they haven't actually come full cycle yet. They haven't sold the real estate. They haven't made a public listing so that people can actually then say, okay, I put my capital in. Yes, I've got my dividends over the years, but I'm ready to get my capital back and I want to deploy it somewhere else. So that's where Realto comes in. So tell us more about what was the opportunity that you saw and what does Realto do?
Yeah, it's a great question. So for us, when we were looking at the market, there are a lot of products that exist out there, these REIT structures, real estate investment trust structures, where they've been around for 5, 10, some of them 11 or 12 years and have still not had a liquidity event. And so whether it's circumstances of life and somebody wants to be able to have a liquidity event, whether or not the person who originally purchased that investment, maybe passed it on to an heir of some sort. Those are all natural reasons why somebody would want to be able to have a liquidity event. Otherwise, there's just the natural element of wanting to reposition your portfolio. So when you have an investment, you're holding it for that long. To your point, some might have been very successful, some might not have been successful. But the ability to say, I want to make a decision with this money, and in many cases, they don't have the opportunity to make a decision with their money. They're beholden to the trust as to if they're going to have a listing event on an exchange, or if they're going to have somebody that's going to acquire them. Those are the two most natural events that happen in the life cycle. But if market conditions aren't great for them, then they just keep waiting. And it's up to the fund company to make that decision of when they do it.
Yeah, and I think so. So first of all, let's explain why these assets are illiquid. So let's just use an apartment complex, and let's just say that you had 100 investors get together and they go out and buy a $2 million apartment complex. And one of the investors wants out. Well, you can't just sell an apartment or carve some bricks off the side and sell those and give that investor their money out, right? So the apartment actually has to sell before there can be a liquidity event, or somebody else needs to come in and buy it, like you said. So, or they need to list it on an exchange. But to me, I think that's where people get confused, is they don't understand, well, why can't I get my money out? Well, because your money is actually in an illiquid asset. Real estate, by its nature, is an illiquid asset. And so in a way, it's good, because real estate takes time sometimes to mature and to do what you want it to do, especially when you think about the acquisition costs that come into purchasing real estate. I mean, most people that are going to be listening to our podcast here have purchased a home or have purchased some real estate in the past. And it's not free. You've got real estate commissions, you've got lawyers' fees, you've got all kinds of expenses in order to acquire that real estate. So, you might start out in the hole, 5, 6, 7, 8, 10%, because of all of the expense involved in acquiring that. And so the real estate needs to start appreciating in value in order for that investor to think, okay, I'm going to get my money back out.
Yeah, that's exactly right. And so to your point, if you, using your analogy of 100 people going in to buy an apartment complex, the If there's cash available, then yes, I could say, "Oh, I'm going to buy your equity stake in this asset and do that." Problem is historically it's a very complicated procedure. One, you have to be able to value that asset. Two, there's a lot of paperwork traditionally that goes into doing that, and being able to facilitate the transferring of my shares to you or you to me, et cetera. It's a very complicated, very paper driven process. And most people that are managing funds, that's not what they're in it for. They want to say, hey, we're limiting the amount of liquidity because we don't want to have to worry about dealing with changing shareholder to shareholder. We would rather just use anybody who wants to invest in the fund, continue to raise more capital.
Get it. There's another reason that I believe that a lot of these real estate investment trusts have not had a liquidity event. And the ones where you see where they've not had a liquidity event, it isn't necessarily because the timing's wrong, but they've got an internal management fee on that thing where they may be collecting 1.5%, 2% per year to manage the real estate, and they don't want to give up that cash cow.
Yeah, it's the golden goose. And if you typically, once you list that on an exchange, because those are more publicly known, those fees, you have to disclose it. Most people will then reduce their fee because it's publicly listed from whatever that number is, 2.5 down to 1.5.
Yeah. And so there is something there where there's a little bit of greed on the other side of it.
Yeah, they got to give something up to be able to do it.
Right. Yeah. And yet there are ones that listed, or they actually filled up, did what they said they were going to do, and 2-3 years later had a liquidity event and made a lot of money.
That's right. I mean, you see lots of success stories across the street, and just because something hasn't had a liquidity event doesn't mean it wasn't successful. But it's at the same time for us, creating an exchange for alternative investments. We're not trying to make it so that these are trading like a stock. While they do trade as easily as a stock, we're not trying to, if you look at, there's high frequency trading that exists in the world of stocks today. And my background comes from the exchange world, so I know that market really, really well. We're not trying to make it so that these are being, turned over multiple times in a day, but we want to be able to have pools of liquidity that are available to somebody who wants to be able to exit. There are institutional buyers out there, and even retail buyers, technically, that would love to be able to buy some of these positions.
So let's talk a little bit about that. But before we get to that, I want to throw out the name McKinsey Group. And McKinsey Group, anybody that's listening to this who owns a non-traded REIT, it's highly likely that you have received a solicitation from this McKinsey Group to buy your shares in a non-traded asset. And typically when McKinsey Group is making an offer, they're discounting it 50 to 60%. They're saying, we know you need the money. If it's showing $10 a share, we'll give you $4.50 today just so you can get out of it.
Right. So it's there's three really well-known groups. McKinsey's one, CMG is another, and Comrit is another. So those are kind of the three that probably, if you own one of these assets, you've received a letter from one of them.
And most of the time, that's not a good deal.
Oh, yes. That's absolutely right. So all of these funds post an NAV, net asset value, gives you an idea of what the fund, usually it's a third party that values that, and they say this is what we believe the value of the fund is. So let's say that the NAV is $10. Most of the time, the offer that you're going to get is going to be around $5.
Right.
So it's 50, like you said, 50% discount. But for and most people would consider that to not be a great deal,
right? But they say there is no planned liquidity event for this. But if you went out, we'll get you out now,
right?
And so what you've done with Realto is you said, let's make an exchange, specifically starting out for these non-traded REITs, for people that want to sell and for people that may want to buy. And so you are diving in deep to the non-traded REITs that are still out there today, and there's a lot of them, and saying, okay, what is the value of this really? What's the most recent appraisal? What's the cash flow? What's the occupancy, et cetera? You can come to what's the real value. Is that an NAV close to that? And then you're going to say, institutional buyers are you interested in this? And then how does all that work? Tell us how you put those two pieces together.
So we have a lot of different institutional investors that want to work with us. They're very interested in buying these assets. Some of the institutional investors we're talking to, they would love to be able to take down $50 million in this particular position, this one asset. So for us, and that's fantastic, but getting to the end investor, providing them information to let them know that, hey, there is a legitimate buyer out here. And in most cases, there is going to be some type of a liquidity discount, right? Because the investor is going to have to hold it for a long period of time. There's not an immediate opportunity for them to turn that asset around and sell the $50 million worth of the asset. So there still would be somewhere between a 10, maybe 15% discount of that particular asset that the institution would want to have, but obviously significantly different from a 50% discount. So for us, we have a fully electronic platform that allows an investor to come in and look to see on the marketplace what current bids are out there. And if you say, hey, I'd love to be able to sell it for that price, you can sell it for that price. And if you say, well, I'd rather name my own price and create a limit order and say, if the prevailing bid on the screen is $9.50, and you're like, I'd rather get $9.60. Well, you can put your limit order out there and see if there's another side of the trade that would come in and buy it for that price.
So essentially, if you think about it this way, and I don't know that a lot of people think about the market this way, the stock market in general, but if you think about the stock market in its most simplistic form, it is supposed to be a means for an orderly exchange of shares. For every wannabe seller, there's got to be a wannabe buyer, right? And so when you say to a broker, hey, I want to sell this stock, well, there's got to be somebody on the other side that's willing to pay whatever price that stock is worth, right?
That's right.
And they may not be. If somebody wants to buy and nobody else is wanting to sell, then they're going to have to do something and say, hey, I'd pay more, right? I see the value.
Yeah.
And so you're creating an exchange that's just like that, connecting the buyer and the seller, that is separate from the stock exchange, but this is an exchange for alternatives.
That's exactly right. So I've spent most of my career in the exchange world, right? So in the Kansas City area, a lot of people might know of a company that was a startup called BATS here in the area. I was one of the original guys to help build that, and then moved over to Europe, built BATS Europe, and then moved back, started the ETF business for them, and then ultimately moved to the New York Stock Exchange. Each time we built a new market, it was always a process of making sure that you're bringing the buyer, you're bringing the seller, and you're helping to make sure that both sides of that transaction are there at all times. In the alternative space, this is a brand new thing. There aren't a whole lot of markets out there for alternatives in general, and then especially there's nothing out there for these real estate related investments.
So if a person says, hey, I like real estate, I could go to your exchange and I could see what's out there. Could I actually offer to buy at the same price that the institutional investors are willing to buy at?
Absolutely, they can. So we're not limiting it to an institutional investors. In fact, we like the idea of being able to have it open to all investors. And that's kind of our hope, is to kind of break down some of the walls to say alternative investments should be for everybody. And so part of our goal is to be able to create additional transparency. Transparency comes around disclosures of information as well as price discovery. Being able to say, hey, there's a bid out there by McKinsey or somebody else at 50% discount, but there's also this other institution that's willing to pay, 10% discount. But then maybe there's an individual that was willing to buy something at a 5% discount.
Right.
Totally, we love the idea of being able to open it up.
So I'm going to use an example here. This is a real live example, and that is the studio that you're sitting in right now is part of a 24,000 square foot office park that I own. Right now, so we're fully occupied. We have a net cash flow after expenses, et cetera, of around 6.5%. And let's just say that ballpark, you got a $3 million appraisal on the property, right? So you got a $3 million property that's kicking off a nice 6.5% cash flow. But somebody could come in and say, hey, Dean, I'll offer you 15% discount on that, right? So I'll buy it for, $450,000 less than your $3 million. Well, what's that going to do? That's going to allow that individual that purchased it to immediately get a better cash flow than if they paid full price. And in essence, what you're doing in that exchange is you're allowing the buyer and the seller. The buyer can come in and say, here's the property, here's the occupancy, here's the rent rolls, here's the yield. I can buy that at a 15% discount. Now all of a sudden, I got immediate 15% equity on my purchase, and I got a pretty decent cash flow. In today's really low interest rates environment, that's where your institutional investors come in and say, hey, we like this.
Absolutely. And again, when you're using the illustration of this building, that's a very real life scenario. Most of the buildings like this aren't in a big REIT structure. REIT structures typically are just massive in size. A lot of these are 1 billion to 5 billion in size. But when we also are going to be rolling out in the very near future, the ability to put a single asset LLC on the platform, so that if somebody says, hey, I want to de-risk myself, I currently own an asset that's $5 million in value, but I'd love to be able to, offer it out to somebody. So I'll take half of my skin out of the game and put it out there on a market, let people be able to decide, is that something I'd want to invest in? We're in a still pretty yield-starved environment. So real estate does a fantastic job of providing yield in somebody's portfolio.
Yeah, no, I always think of real estate, if it's purchased properly, real estate really acts like a bond on steroids.
That's right.
Right? You get the yield and you get some price appreciation over time, hopefully. Obviously, we know it doesn't always work that way. All we got to do is think back to the 2008 financial crisis, and we know that real estate doesn't always go up.
That's right. And then, of course, one other thing that real estate often offers is also tax benefit. So most all real estate structures offer some element of tax incentives or benefits.
So at what point did you realize that this need was out there to connect the buyers and the sellers, the wannabe buyers to the wannabe sellers? And what point did you do that, and how long has Realto been operating? And just tell us a little bit more about that.
Sure. So I mentioned earlier that along my career path, I spent about 5 years at the New York Stock Exchange. And when I was at the New York Stock Exchange, it was pretty interesting that the number one competitor that they had wasn't another exchange. It was the private markets. Everything that they were doing, it felt like they were fighting to try to make more companies, more products come into the public environment, because that's how they make their money. They haven't made a lot of investments into the private environment. And so for them, that was a constant battle they were having. And for me, sitting within that organization, I could see how much the private markets were growing. And the private markets are fantastic, but the biggest hurdle that they have is liquidity generally. And again, I mentioned earlier that there's been a lot of growth in secondary markets for corporations, whether it's Second Market, which NASDAQ ultimately bought, or Shares Post or Forge. All those different types of companies have come out to try to create secondary markets for that. So I saw that and realized there's a big opportunity here. I mean, the real estate market is $10+ trillion in the U.S. So the opportunity to address that is pretty significant. And then I met up with my co-founder, Jeff Kinney, who also lives here in the Overland Park area. He and I started talking about just generally real estate investments. And I posed the question to him, like, you understand the alternatives world way better than I do. You understand alternatives and real estate, different structures, et cetera. If we were to think about the possibility of creating an exchange-like mechanism, do you think that would make sense? Do you think that'd be possible? And we had that conversation at the beginning of 2020.
Okay.
So right before the pandemic kind of set in. And so we had that conversation. He's like, absolutely. He's like, if you would have asked me that question 2 years ago, technology was so far behind in the alternatives world, we probably couldn't have done it. Because there's things historically like medallion signature guarantees. If I want to transfer an asset to you, historically, you had to go into a bank, get a wet stamp, sign it, etc. Well, based on certain technology, and then fast forward, the pandemic actually really helped it. That sounds weird to think that the pandemic helped something.
But the pandemic sped up the adoption of technology light years.
Absolutely. So with that, we were able to leverage that, and we spent 2020 kind of building the idea, the concept, how it would work, et cetera. And we spent the latter part of that year raising capital to be able to fund the business. And then we officially launched in 2021.
Awesome. Well, that's a great thing. And I think, so I want to talk a little bit, and I don't know if you're there yet. I don't know if you're going there. I'm learning from you today. You talked about the private markets, and you hear people talk about private equity or about private debt, and typically private equity and private debt has been exclusive to the institutional investors, right? Are you planning on making a marketplace for private debt and for private equity? Is that something that is on your radar?
It absolutely is on our radar. So we'll be launching our private market capabilities later this year. We are going to start in the real estate end of that spectrum. But once we have that solved from a real estate perspective and we launch it, there's very, very little that we have to do to be able to roll it to other asset classes. We want to stay focused initially, and it makes a lot of sense to focus on one particular asset class. But absolutely, other types of private investments, private debt, et cetera, we'll definitely be able to roll into.
Awesome. Well, we're going to put some links in the show notes to your website and some things where people can learn more. It's great to have entrepreneurs on the Guided Retirement Show. Now, I know there are a lot of people that are retired that have these non-traded REITs, and they might say, "Hey, well, let's take a look, and can we take a look and see what it's worth?" And all they got to do is get with their advisor, especially if they're here at Barber Financial Group, and we can hop on your exchange platform and say, "Hey, is this one on there? Can we sell it? If so, what are we offering?" And I would encourage people to check it out, especially, and you may know somebody that's got these things. So check out the data that's in the show notes, and certainly great having you on here.
Awesome. Well, it was great to be here. Thank you so much for having me.
You bet. Thanks so much for joining us on the Guided Retirement Show. I'm Dean Barber. We appreciate you joining us. Hopefully you enjoyed my conversation with Brian King. As a quick reminder, get out to the show notes, check out the website. If you want to visit with one of our certified financial planners, you can click a link there as well and schedule a meeting with one of our CFPs. And if you're watching us on YouTube, make sure you give us a thumbs up, subscribe to the YouTube channel, and you'll get notifications every single time a new episode airs. And of course, we would love it if you would share our episodes with your friends. Thanks again for joining us on the Guided Retirement Show.
Starting your route to retirement.